Hey guys, welcome back. Happy quad witching day. Were you disappointed? Did this stock move normal? There's no fireworks? Like when you bought your first stock on Robinhood? Did this not go to $5,000 today? Yeah. Nothing really happened. Pretty underwhelming. It's not red like I was thinking. It actually did have this huge bump up candle right here on GME. I think it was just fake though. It's just manipulated. This is such low volume. This is probably the Hedgies, I don't know, false breakout, bull trap. I don't know what this was from, honestly. Could have been anything. It's actually really good looking though now because it's holding above VWAP too and coming into close. This could have been other hedge funds too, trying to get it above 200 for options to expire today. Excuse me. I'm not too sure. Our plays from this week are YOLOs for the squeeze are worthless. Yep, that's the right word for it. That's okay though, 1 week at a time. I did open up some plays for next week. I'll show you guys those again. These are some debit spreads. If this doesn't make sense to you, if you don't know how calls work, you shouldn't be doing this. You see max loss on this, you think that's all I can lose. Not technically. There's assignment risk. There's a lot of things that can go wrong with spreads on options. If you don't know options, just don't do it. Buy the shares on GME if you want. But yeah, so I opened up some for next week. So these are all GME right here. So we've got 2 naked calls, 620. They're so expensive, so I really don't like. I want naked calls, but it's just so much premium. That's why I'm so far out of the money, unfortunately. But yeah, these are actually, because I averaged down today on the dip, so that's actually back to break even, which is nice. And then I got some 365, 375 calls. This is the debit spread, so this is one of them. And then I got 630, 690 call debit spread, and these all expire on Friday. So the biggest catalyst to me, and typically with most stocks, is earnings. That's when something can really change. GME's acted differently, of course, because there's been gamma squeezes and there's been news and this and that. However, Tuesday, I believe it's Tuesday, is earnings. Let's see. So earnings 23rd, yeah. So earnings is a clear catalyst for movement, and it might not be good. It might be good, but it might not move it like crazy. We're just kind of hoping and speculating. Cohen has great stuff to say. Maybe their numbers aren't going to be that good. It's hard to know. I mean, yeah, PS5 sales or whatever, but that was expected. We're hoping Cohen basically says this company is going to be bigger than Amazon, and here's why. And yeah, that would be a catalyst. So I got some exposure for that with these debit spreads and these naked calls. And then of course we've got a bunch of shares on our other accounts. Got not a whole, I mean, we've got probably 60 something shares on total. But yeah, so I'll briefly tell you about debit spreads. And again, if you don't know about naked calls or options in general, don't do this. It really can mess you up. So basically a call contract is the right, it's a contract to buy 100 shares of that stock at the strike price that you choose, right? So I have, let's just say I have one 630 call contract for our GME. So basically I have the right to buy GME at $630 by the end of next week. Now, why would I want that? The stock's only at $208. Well, yeah, that's true. That's why I'm able to get this for relatively cheap, because it's very unlikely. Even if it goes to 630, this thing won't have any value, right? Because it's got to be over that. So once you have that right, what you can do, basically, if you have a call that you've bought, you can then act as if you have 100 shares of it and sell a call, right? That's called a covered call. So if you have 100 shares of a stock, you can sell covered calls on them. And this is the same idea, because this is a contract to buy 100 shares. So it's basically like you have 100 shares. Then you're selling a covered call on the call that you bought. So you're selling a call on the call that you bought. So I've got plus, these are the ones I bought, these are the ones I sold. And the spread is basically the ones I bought were more expensive than the ones I sold, to put it very lamely. And so that's basically the cost, is the difference in the ones between the ones I bought and the ones I sold. That's the cost of it. So here's the cost. It cost $420. That's because I got 21 of them. So let's see, each one was see right here, each one was $29. It wasn't. It's changed since I bought it. And then the max gain, where you're getting the max gain on that, is basically the spread between the two contracts, right? Because so the calls that you bought, they're going to go up in value, and the calls that you sold are going to lose value. But your profit is the difference between the two strikes. So in this case, it would be, what is that, 60? So $60, I believe, a contract. And times that by 100 because it's 100 shares. And that's where you come up with this number, 125,000. And with debit spreads, what has to happen is you can sell it at any time, just like a naked call. These move differently, though. They move slower. They're not as volatile because it's not just a naked call that you bought. You also sold a call. So it's hedging. So it's basically they kind of negate each other. But if the stock keeps going up, this spread, this position will gain value. And one thing that kind of sucks about debit spreads is if you've got a lot of volatility early on, you're not going to gain as much. I mean, you're not going to gain as much anyways from this. But if you have it a lot early on, this isn't going to move as if it was a naked call. This will take time. So you actually want the time to kind of get closer to the end, and you want to be above your top strike of 690. So if GME is over 690 by next Friday, this will be worth around 125K, these 21 debit spreads. So that's the gist of it. It's a lot of premium that's really expensive, and that's why you can hedge it by selling calls also to cover the cost. So if you look at just this, let's see. So the cost basis on just the call, if I was just to buy one of these calls, is $633, I believe. Not sure actually if that's, $300. Anyways, and then the premium I receive for selling the call is $285. So that's where you get the debit spread, the cost. The difference between those two is your cost. That's debit spread. So I've got that one, and then I've got one for closer to the money. This one costs $506 and a max gain of $10,500, and that's if it closes over $375 by next Friday. Given I'm going to close it, you want to close it, or I'm going to close it before it expires. You never want to let spreads expire because these can close out long after the market closes. And if the stock moves a lot, and say it moves between these two prices, then you could get exercised on one. This is where it gets sketchy. You get exercised on one, and then you're on the hook to come up with basically all these calls you sold. Because I've sold all these calls, and I would have to produce that. And yeah, you've got the leverage of these, but if the stock price moves down before you can exercise these to get the stocks to give to the people that bought these calls, you're screwed. So careful with debit spreads. Always close them out. Excuse me. But yeah, GME today, it looked good. I don't know what this bump was, but we're holding above the 9 moving average now. There's kind of a bull flag actually setting up, and we're waiting on earnings for next week. And honestly, I've thought about it before with GME, and I've not read anything or heard anybody talk about it, but I've thought, like, I'm pretty sure retail owns like all of the GME shares. If we were actually to recall all of our shares, like legitimately, I think we own all of the shares. And it's like, okay, so how does that work if they have these? There's so many fake shares, synthetic shares, naked shares. I mean, it's ridiculous that if retail alone, and we probably own more than 100%. Like literally, if you think the float is what is it, 70 million, whatever it is, and then inside GME, I think has 20 million of that. These are just rough numbers. I can't remember what they are. I think retail has the right, and I say a right because we don't actually own the shares, and that's part of the reason why we're able to own even 100% when hedge funds and institutionals are supposed to own whatever percentage you've heard, 50%, 60%. Because part of the thing that's going on, if you've learned, and it could be with all the brokerages, I don't know, but I know with Robinhood, they're not actually buying the shares. They're hedging. So when you put in an order to buy 1 share of GME, they're just going to hold it. They send it to the market maker, whatever happens. I can't remember all the details, but they don't actually put the order. They don't actually do it. They think there's a losing trade. We're just going to hold it. We're not going to actually buy the shares. We see the shares are there. If it goes down, then they lose the profit. And they're basically just being the bank in the whole thing, and we're just looking at numbers on a screen, more or less. So what happens though is that and I think that was kind of why Robinhood, they were saying, was closing down. I talked about this in my last video. I won't go over it all again. But basically, if that's the case, these 10 shares it says I have in Robinhood, if these are not actually pulled out of the market because Robinhood didn't do it, then this isn't counted. So that's how retail could literally own over 100%. If you think about all the people around the whole world that have been watching this and buying shares, and there's only 70 million total, but I think inside it's like 50 million that are in the float. I can't remember the numbers. It's something like that. It's going to be insane. Not only is it going to be a squeeze for the real shares, but then you think about all the synthetic and naked and all those other ones that aren't even calculated. It's going to keep squeezing over and over because they have to turn over these shares maybe 3 or 4 times. If it's 400 or 500% of the shares that are supposed to be, basically, if everyone owns 500 million shares out of the 70 million, well, then it's going to have to turn over five times to get to that, right? So it's just, it's ridiculous. And then so I was thinking about all this. I was like, okay, I think we own at least 100%, maybe even more. And then I just actually saw this on Wall Street Bets. So and he's saying the same thing. I'm like, wow, I literally haven't seen anyone say this. And then this was just saying, I'm like, yeah, they've done the DD. I didn't really do any DD. I was just starting to like think about it logically. I'm like, this doesn't make sense how we don't own at least 100% or a lot more than what they're saying. They say we own like 10% or 20%. It's ridiculous. There's no way we own less than 100%. I did the math. There's literally no doubt that we own 100% of the remaining float. This could be up to 1,000. Yeah, so this guy's saying retail could own up to 1,000% of the float, and it's not crazy. Honestly, you need to look at this DD. Like, it's not crazy to think that. This is under the GME on. I'm getting like shaky thinking about it. It's so crazy. This is under the GME subreddit, so I can link this stuff too. I'm not gonna read through it, but it's like you don't even have to read through it. Just look on my comments, look on Wall Street Bets. People from all over the world are sharing how many shares they have. And this isn't a large float, it's a very small float company. Whew. Anyways, so this could be insane. Way more insane. So you've seen our positions. This looks like a nice bull flag. It's crossed over, unfortunately. The 9 with the 180. Not going to matter too much on this stock. It's so manipulated the price. But also, if you look at this, our support was higher than the support, and this is actually holding support back here, I think, on kind of this 180, this kind of high. Resistance becomes support. So this was our resistance back when this thing bumped up like 180 or so. And we kind of hit this 184. So hit a nice little support on that old resistance, and it's looking good. It's good for next week. I'm ready, sort of. I might actually have to cut this off and get some more positions. I'd like to get some closer to the money. And I don't want to make 125,000 on this by next week. I want to make like 5 million. You know what I mean? So I'm trying to get exposure. I mean, we've got naked calls, so those could be worth a lot. We've got a lot of shares. It seems ridiculous and crazy to even talk about that. And like, that's a possibility, but I think it is. I really think it is. Yeah. So anyways, it's hard to talk about anything else after that, but Super League Gaming's been going nuts. We called this out. Originally, this was a play off of the Ryan Cohen tweet back here. I swung traded there, and then I got out, and then I called it out back here when it was 6:30. I got in right here. This thing has almost doubled since then. Yesterday, around this range, I made my shares free, so basically sold back enough shares to cover my initial cost. Because this chart was almost like, this could be a bull flag. And I was like, I wasn't too sure about this, and I want to play it safe. If GME really is, I mean, my belief in GME, it will crash the market. So to have long positions and other stuff, it just sketches me out. But yeah, set up a nice floor here and then this thing just ran again, and then look at this. Today it's setting up a nice bull flag. So it's going to the weekend. I took a lot of it off the table. Like I said, I made it free back here, so I'm not even going to think about it. We've got it on this account. So yeah, it's not a big position anymore. It's only 70 shares, but these are all free, so that's nice. And these have already gone up 50%, or like 20%, I guess, from when I sold. MP, if you guys remember, I called this out as rare earth materials. This could be a huge, honestly. They're just getting started, potentially. I got calls for earnings. The earnings were really good. It ran up. The calls had enough premium though. They had great earnings, and the stock price ran up. And look, these calls are down 43%. Isn't that crazy? That's how premium works. So I'm hoping this thing continues on. I think it will. These are 60 calls, and I've got a month on it. So yeah, I think this will hopefully have a continuation next week and run up into this breakout of this, and then those calls will gain some value. What did we do on here today? This counts at 9,600. We have our eyes play too. I sold out of some of the eyes yesterday, if you guys remember, but I was going to trigger a good faith violation if I sold out the rest, and so I didn't. And I actually might sell them right now. It's looking like a nice floor. I don't really want to hold this over the weekend though. It's still bullish in a lot of ways. Yeah, I want to get capital, so I'm going to close this out, actually, limit. Okay, so I got filled. I don't need exposure to this anymore right now. I need to get cash balance up a little bit. Especially for next week if GME goes crazy. What else did we do on here today? Order history. This is never right. Build orders. That's it. That's all we did on here. E-Trade. We did stuff. Yeah, there you go. Peloton. Yeah, that's right. Crap. You guys caught me. Yeah, remember I said Peloton? Oh, it's going down, and my charts tell me it's going down, and a kid just got killed by a treadmill, and stock ran up today like 5%. So it's the stock market. No, I just jumped into the play too quick yesterday because I saw it coming down, and I'm like, it's in a bearish position. But then I also thought back here, I'm like, there's some support down here, so it might be kind of hitting a bottom soon. And then sure enough, today, for whatever reason, it ran up. It's up 5%, and it's setting up a nice bull flag. This thing's bullish now. I'd go long on this if I wanted more exposure to other stuff, because this looks like it's hit a nice bottom, and this is looking this is looking good. I should just reverse my play somehow and go the other way. But yeah, that's a nice bull flag. MACD's crossed over. It's at a nice support right here. On the daily, yeah, you can see it's kind of found a floor here. It hasn't crossed over the 9 with the 180, so it's kind of bouncing off of that. The support, yeah. I don't know if I want more positions, but yeah, this would be one I'd go long on. Anything at this point, but yeah, so that sucks. That does suck. I lost that 1,500 on that Peloton play. But let's not look at that. Let's look at Airbnb covered call. I closed out, so that was $350 in premium. Legit. And then debit spreads on GME. Oh, I sold out of shares because I just need more cash in this account. Took a little loss on these Nano X imaging. Still believe in the play, but I wanted to buy into more GME. I closed out of my Tesla play too, just so I had more capital for GME. The Tesla play, it was a long-term credit spread, and yeah, I can get back into it at any point. It's not moving quickly. RKT, what did I do? About to open. Oh yeah, I opened up calls on RKT, and I think I timed this thing perfectly with RKT. Funny, I wouldn't typically think that, but hit this bottom here. It looks like it's totally found a floor. MACD's crossed over. I mean, it might stay in this range for a while, but it's finding support. I mean, on the daily, it's still kind of bearish. It really is. But that doji could mean a reversal, that long doji on the bottom. And then where's it right now? It's at 23, so it's kind of, that's right here. So this is the support it's maybe finding, which is this old resistance. So I'm hoping those calls will do well. People talk about on Wall Street Bets short squeeze on this and that. I don't know necessarily. I think this is heavily shorted though, just how it's held down so much. And I'm bullish on it having the long term. So I believe in it. It's just yeah, this covers next earnings, these calls. I got 3, the premium's kind of high on these. I got 3 of the 44.89 calls. These expire in 3 months, and then 2 of the 34.89 calls. These expire in 91 or yeah, 3 months. They're actually both up, which is kind of crazy. So it's this kind of stuff, guys, that I'm not saying this play is gonna work, but it's like it's when it's boring, when it's slow, and when eyes aren't on it. That's when you scale in, and that's when you make your money. Because that's when there's not premium, and once it's in the spotlight, once it's run up, it's like not too late. You can be a momentum trader, and that's really what I am. But on stuff like this that I have conviction on and I follow closely, like RKT, Corsair, you kind of learn the company, learn how it trades, learn how it moves, and then you just, when it's quiet and still and low and calm and it's not talked about or looked at, you start building up this position for when it goes crazy. You're going to have so much exposure to it. It's going to be sick. So that's what I'm doing with this one, Corsair and Rocket. But Rocket, typically I wouldn't expect it to be so volatile. This was abnormal, and I could have made like 15 grand on that, but it just didn't work. It just stopped. It just stopped and went back down. It didn't make any sense. Just did that. Yeah. Anyways, we don't talk about that. But yeah, let's see. I think that's about it on here. GME, Tesla. Yep. Oh, I see. I bought another Corsair call. That's what I'm saying. Woo! Corsair, baby. This is a good stock. It's a good company. I don't know when it's gonna happen, but it's gonna happen. It's tight in this range, man. It's getting real tight. MACD starting to flatten out. Ideally, you'd want the MACD and the signal to come up and kind of be in this flat range, or to signal that it's maybe gonna start breaking out. But at any point, any day, because this MACD is pretty much crossed over. Once it crosses over, it can pass through the midpoint pretty quickly. And but yeah, it might trade in this range a little bit longer because this will probably come up more first. But yeah, I'm scaling in further and further into that with calls, and I've already got the shares actually. So, but on yeah, that MP, hopefully by Monday those MP calls are crazy. Corsair, we've got the 60 calls, and then yeah, we have a put credit spread on that. See, that ties up a lot of capital. I love credit spreads, but if you do them for a long time, it's like, yeah, this is tying up $3,400 in capital, which it's fine if you're doing it like on a weekly basis, but yeah, I don't know if I like the long-term stuff as much. It's good. I mean, it's a safe play. I feel like this is safe. It's got to be over $30 in 60 days. Once it comes up some, I might just close that out so I have that capital. That's almost like a long-term play you could do in your long-term account. Just put credit spreads or call credits. Well, really put credit spreads, just long-term ones. Because you're going to make more. I mean, this is $3,400 in capital you're tying up to make $2 grand. The stock only has to go up to $30, where it's actually already at $30. So if you had that much capital, $3,400 in shares, you weren't going to make $2 grand in 3 months if it stays flat. And if it stays flat for me right now, I am going to make that. So it's kind of interesting to think about it that way. What else do we have on here? Let me see. Then TD. Yeah, okay. So I bought Roblox. Looks like it's in a nice range. I made these SLGG shares free, and I'm going to I think I might just make this whole account like free share account. So swing trading with shares, and then once we're up enough, and not up enough, but once I look at the chart and I think it's hit a top, sell enough shares to make it free, and then hold the remaining, and then just keep doing that and just move on and just basically build up all these positions that are free for taxes at the end of the year. It's awesome. I mean, I'm not doing this with everything, but just with this account, if you think about it, you're basically net neutral by the end of the year, and maybe you'll have $100,000 worth of shares, but you're net neutral because you didn't take any gains, but you still have these shares. I don't know. It's kind of a cool idea. So we'll see. Maybe I'll do that with this one. Video's way too long. Here's our long-term weekly recap. Today we're up a little bit. I think that's GME kind of helped. Beery came up. Rocket came up some. On the week we are down 1,800. I think a lot of that's probably Tesla. Good thing I dropped some exposure on Tesla when it was high at like 900. I had too much, and I took it down 1 share. Anyways, thanks so much for watching, guys. Have a good weekend. Sub up, like up, comment down. Happy money sticks around. Follow us on Twitter at HappyMoneyYT. We did that picture. I didn't do any didn't tag anything in that, but yeah. Have a good weekend, chill out. Hopefully be on the moon next weekend. Peace out.